Good afternoon. It's June the 16th, 2015. Time to wrap it up from the day. We came in this morning basically seeing resistance 75 to 80 and support 65 to 60. And it would have taken us 72, 73 to get off along today. The idea was that the Fed would not allow the selling that really was pretty heavy overnight to take over our markets today and get the second day of follow-through selling. Also, there is the tendency for the market to rally into the FOMC announcement. So there were a couple of things playing. Definitely had a P right here. And you can see that we're working on another P right here. And so the FOMC probably has as much to do with it as the Fed. Who's the buyer? The 50 lot player. Who bought the opening? The 50 lot player. So this 50 lot player is the one who is supporting the market when things get ugly, and you have to ask yourself, why would they do that? It's pretty easy to do if it's not your money. And they have, apparently, the Fed thinks they have all the money in the world. This is a move out of the middle, a mom, that takes the market higher to new highs. And you can just see, generally speaking, from this point on, the blue has got more action than the red. So everything's really kind of pointed higher. And we're going to get a close, looks like, in the 87 area or so. Now, if we do break support, near support in this 86, 80, say 85 area to 86, then I'm guessing the market will close right in the 2080 area. But the trades, the trades, getting in early that work the best off the software and the idea, mean green. Any one of these B's would have made you money. Could have taken a sell right here. This was the trade where you had a retest failure, and this was a better trade than this one because the market has rallied up, and it did produce a small win. But after that, it's to the buy side. This S would have been a loser. No trade on that. Any of these B's paid off. These B's paid off. Those B's paid off. So this would have been a scratch off of that one, and you had a loser right here. So all the action's been to the buy side. The Greek news filled the airwaves today with supposition and guessing when they will default, if they will. It'd be pretty hard politically to survive that, putting a country into it. Now, if the current ruling party does believe in the default and wants to get it, they can act like it wasn't their fault. They were, just trying to take care of the people, and the Germans did it to us. So there we are. So we have an outside day that tends to produce a trading range. The FOMC bias is to the upside, the FOMC meeting bias. So we'll see what happens. Putting all these together on the F2, assuming a close here at 87.50. Going a little bit higher, we have this F and E period right here. So 90 would be, and then this 93 area. So right now, selling failure to take out 89 to 93. And then last rotate up when the market spilled the other day was at 97.50 and a 95, 97 sell too. On the buy side, this 80, 82 area is pretty good. In strong markets, they'll make you pay up. So we're going to put a question mark by 85, but maybe 80, 82 and get a little bit of pullback. And then 75, 77. Looking at the note, a strong market here too, so something has to give. Inside day, we held at 31, but definitely a P when we closed it out. So trading range. Definitely a P, and right here is 31. So the sell is failure to take out basically 126. 126.04. Oh. Market's telling us that the Fed's not going to make too aggressive language about raising interest rates. We're at 29, so 21 to 25 will be buy one. On the idea we're going to have a trading range into the FOMC announcement, then 13 to 17, buy two. Okay, definitely a P on the 30-year. So sell failure to take out 20 to 24. And then 31 to 03 for sell 2. On the buy side, looks like 4 to 8 is pretty good support. So 5 to 9, buy 1. And then we'll make 25, 29, buy 2. Okay, gold has been really quiet. It is selling. So I think what gold is telling us is that Greece will not leave the European Union at the end of the month. Again, that's supposition, but this market's not really suggesting that there's a selling going on. It's having a hard time at 90, and they're not having much luck busting 70. And we're right now at 81, kind of right in the middle, which is where we end up with an inside day at trading range. Okay, we have a P in a lower market, which means short covering. So getting started, got this little ledge right here at 84. We're at 81, so selling 84, 86, sell 1. 89, 91, sell 2. On the buy side, 75, 77. And 70 plus or minus. Crude oil. Okay, it's definitely got a buyer below 58 and definitely have a seller above 62. Of late, there's a pretty clean break in the market at 60.75, so 60.50, 60.75, then it jumps to 61.50 for resistance. 59.50, 58 even. where support is. We're looking at our F2 screen. It is a P, it is pointed higher, volume is higher than it was yesterday, so selling 60.50, 60.75, sell 1, and 61, 61 and a quarter, sell 2. We have inventories tomorrow, and I won't have a number until in the morning. 59.50, 59 and a quarter, buy 1. And then 58.75, 59 even, buy 2. Okay, for the euro, potential deal rallies, no deal on, sells. So the market just gets whipped back and forth on where they think you're going to get a deal or not. So we have a seller 1350. We have had a buyer below 1200. So we got a fairly tight range right here, not going anywhere fast. So looking at this 1275 area right here, 1269, so sell 1, 1275, plus or minus, sell 2, 113. Might be quieter than that because of the FOMC. This usually gets pretty quiet in the FOMC. We're 1257, so I like our 1225 for buy 1. And 1200 for buy 2. And that's it for June the 16th, 2015. I will see y'all bright and early in the morning.